So carnage on Wall Street overnight. The Nasdaq was off 3.1%, the S&P down 2%. I'm joined by Adam Carr, market economist from Business Spectator. Adam, what drove the sell-off?
We are seeing a renewed rout in the tech space, well, initially at least anyway, but that seems to have spread to the rest of Wall Street. And, at the bell, it was a fairly broad-based and aggressive sell-off. I mean, the S&P was off about 2% as well. The interesting thing is it's happening against a backdrop of pretty good data. So jobless claims in the US are at a 7-year low. And for those who think that Greece was, remember the phrase, the Greeks are just kicking the can. They tapped the market for the first time in about 4 years last night. And, that went without event. Their I think it was 3 or 4 billion euro bond issue was 7 times oversubscribed.
Wow, so we're hearing plenty of good news in the sort of the broader economy, but it's these high growth, high momentum stocks which are getting hammered. These are the tech stocks, these are biotech stocks. If things are going so well, shouldn't those stocks be the ones which are having the momentum and the run?
Yeah, you'd think so, which is why I just think it's computer algorithms. They basically have probably tried to push these stocks higher, but there was a view that valuations are already stretched. The market abhors a vacuum. And we're just seeing a bit of a correction at this point. I think from peak to trough so far, the Nasdaq's off about 6%.
So talk to me about how these algorithms would work in terms of causing such wild swings in the market.
Yeah, it's like high frequency trading, right? They just test the market with bids and offers and try and find out where I guess the path of least resistance is. There's many different models. Some use some of the more complicated ones use keyword identification in the media to try and figure out what sentiment's doing. And look, they try and push, they don't have a particular direction. They don't care, short, long, whatever. They're just trying to find the path of least resistance, and they'll find that, test a weakness, and just go for it.
So what does that mean for trading today? Because obviously with those good numbers out of the US, you would think that our market would be saying, okay, the world economy is rebounding, but with this big fall on Wall Street overnight, that's going to hit us, right?
Yeah, absolutely. And look, the other thing is with those Chinese trade figures yesterday, they showed demand for copper and iron ore at record levels. So another reason why our market should go higher. The SPY suggests we won't. The SPY suggests that the futures market suggests that we'll be down around about 1% following that US lead.
Adam Carr from Business Spectator, thank you very much.
Thank you, Jackson.